Funding for Market Journal is provided by the Nebraska Corn Board.
This is Jane. She thinks she's just filling her car, but she's also filling the air with cancer-causing toxic chemicals used to boost octane in gas. What doesn't burn in the engine enters the air and your lungs, even your heart and brain. Bad for everyone, especially kids. Ethanol is a natural octane booster, clean burning and non-toxic. More ethanol means less scary stuff in our gas and in the air we breathe. And that makes your choice pretty plain, Jane. American Ethanol, cleaner air for Nebraska.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Luke Beckman looks at foreign demand for corn and soybeans. Loren Giesler talks about managing soybean diseases. Richard Randle discusses the Veterinary Feed Directive, and Dave Aiken describes how the Portability Rule may be able to simplify estate planning. Luke Beckman from Central Valley Ag is our corn and soybean market analyst this week. There is one large market for U.S. soybeans, and it accounts for more than half of America's foreign bean shipments. Through the first 10 months of the calendar year, China took 56% of U.S. soybean exports. Its total over that time period was up 34% from the previous year. Mexico and Japan together bought 46% of American corn exports, and both imported more from January through October than during that stretch in 2015. We talked with Luke Wednesday afternoon at CVA's offices in York, Nebraska, and began by discussing the current demand environment for U.S. corn and soybeans.
Well, really, Jeff, this goes back to what we saw in Argentina and Brazil a year ago for both commodities. As a lot of people are well versed, we had the corn problems in Brazil last summer with their second crop. It burned up. That really created the opportunity for U.S. corn exports late in the season, and that pipeline in the world sense was really empty coming into our harvest. And so we've just continued to export corn at a pretty good pace. Soybeans, same story. Argentina had the problems last year with the wet weather during their harvest season, so it just created this void in the world marketplace. And so U.S. exports have really stepped to the front to fill that in, really with our traditional buyers that we typically send those bushels to. So we're just doing it on a grander scale compared to the year before.
What impact then has the stronger dollar had?
Up to this point, not what you would think. With the void being there in the global marketplace, there haven't been a lot of options for the Chinese or for Mexico to procure corn from different parts of the world. That's probably set to change here, depending on how the weather plays out in South America.
Right. What happens when that crop comes online?
Yeah, so we're going to start to harvest corn down in South America in the month of January. That corn's going to hit the pipeline at that point in time and satisfy domestic demand, down in Brazil. So their soybean crop got planted in good shape in Brazil. It's going to give them an opportunity to plant their second crop or their safrinha crop in good shape once they get their beans cut. So we would expect corn production in Brazil to be there, and that really starts to cut into the U.S. business come around June when we're harvesting that second crop corn.
With that soybean crop in Brazil, is your expectation that it is going to be as big as we might think it could be?
Yeah, compared to a year ago, we had some of those issues. Estimates have been moving higher. The USDA's recognizing some of that. Private companies, we expect bean production to be up 10% in Brazil versus a year ago. So the beans are going to be there. Corn feels very much the same way.
Let's come back home here. Tell me about the ethanol margins that producers are currently experiencing.
Yeah, so that's definitely been a positive. And even with exports, these low prices and the problems we had in South America have encouraged demand to really step up, and it has. Ethanol margins are very good right now. You've got a combination of cheap corn. Crude oil has been improving, so your nearby margins in the ethanol industry are very good. So that industry is very hungry. We set an all-time weekly production record the week before. This week was just a shade lower, but still very robust. So we're cranking through bushels domestically for ethanol. You step further out on the curve, though, and there's not carry in that margin structure. So the ethanol trade has been hungry up front, but not so much down the line. So we'll want to see those margins continue as we march forward, but corn demand domestically very good.
Go further into what you think higher crude oil prices could do for ethanol.
Well, I mean, it's part of that calculation. I mean, it's the energy, right? So ethanol is going to compete against crude oil. So as crude prices, increase, that certainly creates an opportunity for ethanol to be competitive. So the other side of that is, we've been producing a lot of ethanol. We've also been exporting a lot of it. So even though production's been very high, our stocks have actually been declining. So that's been pretty positive. Without exporting the amount of ethanol that we have been, you'd probably be looking at a little bit of a different situation.
Let's talk about price outlooks, starting in corn.
Corn market feels pretty doggy. I mean, you're really looking at a carryout at 2.4 billion bushels. Your corn exports are kind of on pace, but when Brazil steps to the plate, can we really see that number grow? Ethanol demand probably does grow, but incrementally, 50 million bushels maybe in January. And then feed demand, we'll get kind of an idea of what the USDA is thinking when we see the stocks report in January. So overall, corn really just feels range bound unless we see problem surface in South America. Otherwise, it just feels like a waiting game until we put the corn crop in the ground. The corn crop in the ground here in the U.S.
That's the follow-up question. You're not going to be aggressive with selling what's in the bin now.
Well, I think it's you would think not, but one thing that the corn market has in it right now is carry. So if you're a farmer and you have bushels sitting in the bin on farm, and you look out to June and July, there's carry in that market structure. So we've kind of been advocates that, man, if you're carrying 80%, 75% of your corn on farm unpriced, take a look at selling 10 to 15% of that out on the curve, further out on the curve to lock in that carry. The only way to lock in that carry, Jeff, is to sell it. So we've encouraged producers to do that. Never throwing all your eggs in one basket, of course, but with that much risk that they're carrying, not a bad strategy.
Unfortunately, we're talking on a week that hasn't been too kind for soybeans, so I'll ask, even though, what are your thoughts for selling in soybeans? Yeah,
the weather coming back this week, we had rains in Argentina that kind of took the wind out of the sails. Technically, we broke through 1020 on Tuesday's trading session, which is a key level of support. So we've got to watch what the funds are going to do. Without some sort of weather complications in Argentina, it feels like soybeans are due for a seasonal correction lower. We'll have an opportunity in the beans, I think, just because demand's so robust, but you hate to use the element of hindsight, but great opportunities in the last 45 days to have marketed some beans, and still, relative to where we harvest, when we harvested soybeans, prices are still favorable.
Where's your target for the 2017 crop at?
We talk about corn. We would really love to have a 4 in front of those futures. We probably wouldn't wait that long, though. If we had an opportunity to sell a 390, 395, somewhere in there off the Deese board, we'd probably entertain that, especially with where the carryouts are and South America looking like it's going to be there.
Next week, Jeff Peterson from Heartland Farm Partners will join us to look ahead to the potential acre breakdown for 2017. Production numbers for the 2016 growing season will be finalized in January, but as it stands, Nebraska is expected to tie Illinois for the top soybean yield in the country. The projected 62 bushels per acre would be a record for both states and 3 bushels an acre above the next closest producer. To recap disease issues Nebraska farmers faced during the year and look ahead to inputs in 2017, we talked earlier this week with Nebraska Extension plant pathologist Loren Giesler.
Well, Jeff, this last year, every year we have seedling disease problems. Our soil temperatures were warmer, though, at planting, so we saw a little more phytophthora, I think, than the previous years. And then going into the season, we had great conditions for production, which favors some of those diseases. So again, we saw white mold to the north, sudden death syndrome, but wasn't quite as severe as in 2015. And then we had frog eye again showing up in a lot of places.
Let's talk about the 2017 growing season as farmers start to think about their inputs here. Some of the research that you've done on seed treatments, tell me whether or not you think they're effective.
Well, the key with seed treatment fungicides is if you're going into a stressful planting condition or soils that are cooler. And an optimum germination for soybeans 60 degrees. So currently with the ground frozen and the forecast, it looks like maybe we'll be going into those conditions where we'll have cool temperatures. When we have cooler soil temperatures and we're putting soybeans in the ground and they're stressed and that seedling's just slow to emerge, that's when it's more susceptible for seedling disease. So that's in general where we tend to see more benefit. A lot of our studies in 2016, we didn't show any return again from seed treatments. So with that said though, a farmer that has a history of a stand problem, that knows he has problem fields, in general, I'd still recommend seed treatment fungicides in those fields. The other one is when we start looking at reducing seed population and seeding rates. Any of us that do this type of research, you pretty much predict if you're going to have an effect, you're going to maximize that effect when you reduce that seeding rate because you're reducing population. You're counting on each of those plants to make it.
So outside of those two conditions, would you say seed treatments are a no-go?
Well, I hate to say no-go because as soon as you do, then you have a problem, right? But it really depends on what that history is in that field. So if you have no history, you've got great soils, and you always have good stands, your benefit is going to be really limited. As we look at pushing that window, planting earlier and earlier to try to maximize yield, which I still encourage, that's where, then I would sure use that seed treatment in that situation when you're really early to get that benefit. But once you get to that window where those soils are, approaching 60 degrees and above for sure, the benefit is going to be limited to none.
More about planting populations. What area here, what range do you think is workable?
Well, I think one thing that all farmers should really assess with the current economy is their population seeding rate. And if you look at the studies that have been done, there's such a range of seeding rates. When we did our soybean management field day studies this last year, we had growers anywhere from 200,000 to 165,000 seeding rates. In those situations, usually those are really excessive and above, what we'd recommend typically at the university in that 125, 120 seeding rate. Now, again, though, if a farmer has a field that they know crusts, they need a higher seeding density maybe to get those seeds up, things like that, that's where reducing down to there may not be effective. But if you have really good soils, you've got great emergence, you can drill that population down to that 120, 125 zone.
Tell me more about row spacing and how it can impact a lot of different things in soybean production.
So as a pathologist with row spacing, the thing that always comes up is white mold. So if we reduce row width, in general, we increase our potential for white mold. So a farmer in northeast Nebraska that consistently has white mold problems, and they're significant, reducing row width may not be effective. But in general, in all the studies that have been conducted, that 15-inch row width is going to yield better than 30-inch rows. And it varies in response, but anywhere from 2 to 6, 7 bushel per acre, depending on the situation again. The other thing to consider with row width, if a producer's set up to do 15-inch row widths, I think that's great. We even see some drills out there at 7.5s. 15, I think, is optimum. When we look at that, though, too, then you have to consider with all the resistant weed issues, that potential for problems. If they at 30 versus narrow, where they'll get better canopy and manage those weeds better.
You can find more information about disease management and seed treatments through links on the Market Journal homepage. Livestock producers are preparing for significant changes associated with the Veterinary Feed Directive, or VFD. At the beginning of 2017, farmers and ranchers will need to receive authorization from their veterinarian to use medically important antibiotics in feed and water. Earlier this week, we talked with Nebraska Extension beef veterinarian Richard Randle about what's in store with the new rules. We started by asking for background on the VFD.
So obviously there's been a number of conversation over the years about concern of inappropriate use of antibiotics in food producing animals and what harm, if any, that might present to the public. And as a result of those conversations, kind of the culmination started in 2012 when FDA issued a guidance for industry, Guidance 203, which basically indicated medically important drugs should not have a label claim for growth promoting purposes, and that judicious use of antibiotics should be limited to treatment, prevention, and control. And they followed up with that with the guidance in 2013, basically laying out a roadmap for how that would be done. As a result of that, the big thing that led to the VFD is that they felt there needed to be oversight by veterinarians in the use of feed-grade antibiotic use in food-producing animals.
What emphasis does the VFD put on the relationship between the producer and the veterinarian?
Well, that's a critically important part of the VFD ruling. In order for a veterinarian to be able to write a veterinary feed directive for a client, they must have an established veterinary client-patient relationship, which means that the veterinarian has sufficient knowledge of the operation and the condition to be able to at least issue a preliminary medical diagnosis and judgment, and that the client would agree to follow those directions of the veterinarian, and that the veterinarian is available for follow-up on that condition.
You said one of the things that might be helpful, for example, for a cow-calf producer would be to think about a given year and why or when you might use certain things.
Yeah, the thing about instituting this is it's going to take a little bit of forward planning and thinking, and so I talk to cow-calf guys about, so throughout your year, so whether it's calving, weaning, seasonal disease issues, where you have in the past used a medicated feed or mineral, how this might affect that going forward, and if it is affected, how you're going to need to work with your veterinarian to fall in compliance with the Veterinary Feed Directive and make use of that product if possible.
How might things change for the supplier, the feed supplier?
Well, obviously, in the VFD ruling, the way that works, the veterinarian would write a VFD in triplicate, and he keeps the original. One copy then goes to the client, but then the other copy goes to the feed supplier or distributor who's going to make up this. So they can only issue the feed, medicated feeds with a VFD product in it under the directive of a veterinary feed directive. So depending on the size and what those distributors, feed suppliers might do, might change how they mix medicated feed, or they might decide not to be in the medicated feed business anymore. If they mix a medicated feed, then they have to stop, clean out everything before they mix any other feed, so there's no cross-contamination. So some distributors have talked about possibly they may only mix medicated feed one day a week or whatever. So it's not going to be call your veterinarian this morning, hey, I need to have some feed to go, some product to go in the feed here, and he writes a directive, goes to the feed mill, and you pick it up that afternoon. So again, it's going to take some forward planning.
How does VFD address off-label usage of some of these medications?
So that's pretty safe and simple. There is zero tolerance for off-label or extra-label use of any VFD approved product. So in order to use it, the antibiotic must have a label claim for using it in the condition that's been diagnosed and treated. There's a duration time frame, so there's an effective start date on the VFD of when it's allowed, when you're allowed to start feeding it. There is an expiration date beyond which you can no longer feed it, and the label also indicates the level that can be fed. You have to follow those labels.
On the Market Journal website, you can find more information about the Veterinary Feed Directive, including our interview with Kansas State University veterinarian Mike Apley, who serves as a member on the Presidential Advisory Council on Combating Antibiotic-Resistant Bacteria. The December Nebraska Farmer says you may have heard of the Xbox Kinect, a camera that allows a user to play video games with their body as the controller. But this month's magazine says you probably haven't seen the technology being used to monitor behavior in hog production. Brothers Brendan and Lucas Fricke are doing just that at Union Farms near Ulysses, Nebraska, as part of a research project with the University of Nebraska-Lincoln. You can read about how the Frickes are putting this equipment to use in the December Nebraska Farmer. Nebraska Extension Ag and Water Law Specialist Dave Aiken says a 2013 tax law change could simplify farm and ranch estate planning. The Portability Rule could help surviving heirs pay less taxes on inherited wealth. Dave joined us Tuesday to explain how the rule could make planning easier.
This is a recent change in the law that makes it easier for married couples to basically exempt twice as much property from federal estate tax as they could before.
Explain to me how it works.
Well, it's complicated, so we'll kind of have to, take it historically, but basically all estates have an exempt amount of $5.45 million each year. And what that means is that basically 99% of all estates in any given year are not subject to any federal estate tax.
So this portability rule would be most important then for those estates over that amount.
That's right. And before the portability rule was available, these families would have to go and get some legal work done to try to deal with their state tax problem ahead of time.
Yeah, describe to me what they would have done here before the portability rule existed.
Well, historically, the way it would be is that, when one parent would die, they would leave their share of the farm to the surviving spouse, and then it would go to the kids. And so the second parent to die, there would only be the one exempt amount available to the kids. And so they could end up with a federal estate tax bill if it was a large estate.
How would the estate planners get around that then?
Well, basically what they would do is they'd have each parent would gift their half to the kids instead of to each other. And so if dad dies first, his share of the farm would go into trust for the kids, but mom would get the income, and then when mom died, the trust would be dissolved and the kids would have it all. And the kids would have the benefit of two exempt amounts instead of just the one.
The portability rule then allows you to take both the mom and the dad exemption.
That's right, without having to get an estate plan with the lawyer first to set it up that way.
All right, so give me an example of how this would work.
Well, let's just take it from the beginning, with no portability and no estate planning. So dad dies, his share of the farm goes to mom. Mom dies, she leaves an $8 million farm to the kids. Her exempt amount is $5 million, so the kids have a $3 million estate they have to pay taxes on, and it ends up being about $1.1 million, so it's not chump change.
So what would happen if they had estate planning but still before portability?
Okay, they would, dad dies, his share would go to the kids in the trust, but it would be taxed. So his $4 million share would the $5 million would take care of that and have some left over. And so kids get that much tax free. The same thing happens when mom dies, so they inherit, the $8 million farm with no federal estate taxes.
Now the final example, which would be with portability.
Well, this way, they don't have to have the trust, so dad dies, the farm goes to mom. She has to file an estate tax return, and that's kind of the little wrinkle, but it's not that hard. It's not that hard to do. You just have to do it. And then, when she dies, the farm goes to the kids, but they get the full $5 million from dad and the full $5 million from mom. So it's an $8 million farm, so the kids don't owe anything.
In that regard, then, this would be a good thing.
Yes, for these families with the large estates, the portability rule is really good, but they still need to adopt a estate plan.
Right, that's the question then. Do you still need to?
That's right, because there needs to be a transition from mom and dad to the kids. They need to decide, who's the on-farm heir and the off-farm heir, what's the split going to be, some end-of-life issues that everybody needs to deal with. It's really important to have those things addressed. And if you don't, you could end up owing no federal estate tax, but the farm goes on the auction block because the kid can't decide what to do.
Now, with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here we again for the weekly forecast. Of course, we're approaching the holiday weekend, and we have a lot of travel going on across the country, and it looks like we are going to be dealing with a storm system moving through the center of the country as we go through this weekend, and it looks like to be a very wet Christmas across Nebraska. Unfortunately, if you're looking for a white Christmas in the southern half of the state, you're going to have to wait a little bit, maybe a good week before we have a chance for an additional snow event. If you're in northern Nebraska, there is an outside chance that you will see some accumulating snowfall as the system pulls up into the Great Lakes region, and on the backside of it, the cold air spills into the region. Of course, this would mirror a similar pattern that we seen last weekend as that system ejected out of the central and southern Rockies, moved up into the northern Midwest. We've seen the heaviest snowfall in the Dakotas, just barely touching northern Nebraska, where we had accumulations approaching the 6-7 inch range along the Nebraska-South Dakota border, and lesser totals down to around an inch as you got into the I-80 corridor. I don't think we'll see that snowfall get as close to the I-80 corridor this time. It looks like it's going to remain in the northern third of the state, but overall we are going to see some precipitation, and on that frozen ground it could create a little bit of an isolated flooding situation if we do get some thunderstorm activity. So let's take a look at the upper air pattern and see how this evolves. And here's our big upper air low. We have a jet around it, that is a jet core that's approaching the 100 to 110 mile per hour range. It's going to quickly move this system up into the upper Midwest, draw a lot of Gulf moisture in the region, spin that moisture up around it, so we're going to see a lot of snowfall in the Dakotas and basically in northern Nebraska, and then this will move off quickly into the Great Lakes region and into the eastern United States, and then we turn our attention to a rather quick moving wave that will move across the northern plains as we go through the middle of the week. Doesn't look like it's going to have any precip with it, just maybe pulling a little bit of cool air into our region briefly before it moves back over toward the east. And we see this high pressure ridge starting to build back in on Thursday and really starts to set the stage for a nice weekend as we go into New Year's Eve and New Year's Day before we turn our attention to yet another storm system that looks like it's going to arrive somewhere around January 3rd or 4th into the region and give us an increasing chance for snow or rain depending on the temperatures. Now as we look at the evolution of this precipitation with this system, we can see a pretty widespread precipitation area in the central Rockies. That moves out into the central plains with heavy moisture in eastern Nebraska, snowfall on the backside, and this quickly exits toward the Great Lakes region, and then we see some pretty benign conditions outside of a little bit of energy moving to the northwest during that system coming in that will move across the northern plains, and outside of that then we look toward the southwest as a little bit of a southern wave tends to move into southern Texas, and we'll watch this system because this is the one that we may lift toward the north as we get into the post-New Year's Day period. So there is a chance for accumulating snowfall. In terms of temperatures, a very nice forecast basically, and this incorporates that high pressure moving in, so warmer than normal conditions from next Thursday through the following Tuesday. Here's that cold air associated with that system coming in, and in terms of precipitation, as that system comes in and starts to get itself wound up, we see the heaviest of the precipitation depicted for the eastern United States and the upper Great Lakes. Some of this may actually impact eastern Nebraska.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, soybean production inputs, the Veterinary Feed Directive, and farm and ranch estate planning. As always, you can keep up with Market Journal during the week by following us on Instagram, Facebook, and Twitter. Next week, Jeff Peterson will look ahead to the potential acre breakdown in 2017, and Justin McMicken will describe ear formation issues corn farmers saw in 2016. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.